Ollie Beckett. I am the lead fund manager on this trust, where we have changed the name from TR European Growth to the European Smaller Companies Trust plc. The recent changes we have made, it's all about hopefully providing clarity to the retail investor and also hopefully providing visibility of our trust in the marketplace. We think we're delivering a decent product for retail investors, which has generated healthy returns over a period of time. We want to get that message out into the marketplace. So that's what the board is trying to do with these changes, provide clarity. The simplistic mandate of this trust is to seek capital growth by investing in small and mid-sized companies in Europe, outside the United Kingdom. By Europe, we mean the mature Western markets. How do we go about achieving this? We hope to achieve this by operating a diverse portfolio of stocks, over 100 names, which allows us to go quite low down the market cap range, where we think there is an opportunity to deliver healthy returns for our investors. The appeal of European smaller companies is that you can invest in the winners of tomorrow. And this is where you tend to find growth within the market. It's also where you tend to see more M&A. Ultimately, European smaller companies over any reasonable period of time has outperformed their larger counterparts. What's unique about this trust? Well, it is a true smaller companies trust. So, for example, 2/3 of the portfolio is invested in companies with under £1 billion in free float. The other differentiation for us is that we're potentially more valuation focused than some of our peers. We're not assuming that interest rates and inflation will remain low forever. So valuation does matter. But ultimately, we are seeking growth companies, but we're seeking growth companies which we believe to be undervalued, where the perception of the market is wrong. Also, we'll invest in companies throughout the life cycle of a company. For example, we will invest in early stage companies. In the past, winners for us have been things like HelloFresh, which has gone on to be a big winner in meal kits. But we'll invest in quality growth companies. We'll invest in even mature companies. Unlike many others, we will have a greater emphasis potentially on some recovery names, where companies maybe in the past haven't done very well, but now are starting to see improving returns. For us, it is all about improving returns. It's not the absolute level of returns. We think if you see improvement, this will drive share price performance and therefore will drive returns for our investors. When we're looking at companies, as I say, we're trying to find companies that we believe to be undervalued and where the perception of the market is wrong. We're looking for growth companies, but we take into account, what is the perceived sales growth going to be? What are the margins going to be? And are the expectations within the market realistic? It's not just about, these guys told us a nice story and it's a nice thematic investment case. But also I would say that within a portfolio, a company, we will look at different valuation criteria for companies at different stages of their economic life cycle. Clearly, an early stage company, you're going to focus more on their sales growth. So you'll be looking at things like enterprise value to sales multiples. But for more mature companies, you obviously want to see that cash flow generation and that increase in profitability and maybe dividends. So it very much depends on where a company is in that life cycle. But the emphasis on, yes, we want to find growth companies. Yes, we want to find the winners of tomorrow, but we don't want to overpay for them. So that's key. Valuation will remain key, but we can find winners of tomorrow at reasonable price. With regards to ESG, look, Europe is at the centre of this. And it's within smaller companies that you will find the pure niches that are helping with energy transition and the move towards sustainability within society. So almost by default, this fund or other funds in this space, you are investing in those trends. And you're seeing this portfolio is littered with companies that are helping society with those trends. Why? Because that's where you're finding growth, and that's where we hope to see exciting share price returns.
Go to our Insights Hub for more expertise, research and commentary on investment trusts. For a full list of terms, please see our glossary.